Welcome back, everyone. Let's dive into today's market action, and let's also take a look at a few stocks that are setting up into tomorrow's session. As we can see from our Finviz Heatmap, we had a very mixed bag of price action. Our energy stocks are continuing to move off those highs and roll over, and we're seeing continued carnage in many technology stocks, including the mega cap giant Apple and Tesla, which was down another 6.84% today. Our S&P 500 finished down just 0.36%, and we'll see in just a moment that we're in a very tight consolidation range. Our NASDAQ QQQ was down 1.03%. Our ARRY Innovation ETF was the big loser for today's session, down 3.72%. We had volatility declining across the board. While the S&P 500 did have a red negative performance, the breadth was actually positive with 54% advancers. We currently see solar energy, Chinese technology, and European financials in our top 3 momentum slots, but those 3 groups all declined for today's session. Filling up the bottom end of our momentum dashboard, you can see that some of these ARRY funds are all populating the bottom, as well as the blockchain ETF. Today's top performers were consumer staples, and we also had utilities and biotech. As we get to the end of the trading year, most investors are still unwinding their legacy positions from 2020 and 2021, and everyone's really just rotating into defense to cap off the year. Our S&P 500 pulled back to this 10-day exponential moving average before bouncing ever so slightly. We did end up having that red finish. This is now day 7 of consolidating in a very tight range. Our 20-day simple moving average is catching up to price, and I would imagine when we get this breakout from this very tight range, we're going to have a large directional move into the end of the year. Remember, this is a shortened holiday week of trading. We have off for Thanksgiving on Thursday, and then we have a shortened day for Friday. So I would imagine there's going to be lighter activity this week. Right now, we're trading inside of this weekly value area, and we have the next level to the upside as 3980.25. The NASDAQ is actually pulling back, and you can see we're very close to having this 20-day simple moving average cross above this 50-day simple moving average. And our Russell 2000 continues along its pullback. We are approaching that 20-day simple moving average, and that is a good level to trade against heading into the end of the week and really the end of the year. Our Dow Jones continues to consolidate in a very tight range. We still have that VPOC above us at 34,502, and this is just continued evidence that investors, they're really not prioritizing high growth and high sales numbers anymore. It's all about what do the earnings look like? What do the cash flows look like? And honestly, it seems like most investors are positioning themselves in stocks that they perceive to be safe. And if the market were to really have a bad skid or move lower, which stocks would potentially hurt them the least. So it's not a very risk-on tape because we keep getting these tape bombs, such as all the madness going on in the crypto world right now. The dollar index had a really nice rollover after we got that lighter than expected CPI print. But now over the past couple days, we've seen a bounce in the dollar. And with that bounce in the dollar, we've seen the move to more safe assets and out of the growth names that are more speculative. It's quite normal to have oversold bounces like this, but really we would love to see this make a lower high and roll back over and potentially get to this 200-day simple moving average. We are beginning to receive economic data that is a bit troubling. It's really just showing that the economy is slowing down in a major way. The October pending home sales dropped 32.1% year over year. Now, usually when we get data like this, it leads to a rally in bonds as investors go, all right, the economy's slowing. Let's go ahead. Let's buy bonds to reflect that. But for whatever reason, we're really not getting that rally in these 10-year Treasury futures or the 30-year Treasury futures. It is important to keep in mind that we had a huge move in bonds after that CPI report, and it does take time to consolidate and really let some of those key moving averages catch up, work off the overbought conditions, etc. If we want some more dynamism in a lot of these underlying stocks, the growth names, etc., the high flyers, we really do need to get a rally in the 10-year treasuries. Right now, we're in this weird in-between zone where the market's clearly reflecting that the economy's slowing. And case in point, our crude oil. Look at this. Moved all the way down to $76 a barrel. Obviously, this is rolling over, and typically energy rolls over if investors think the economy is going to enter a recession. We did end up coming off those lows. Perhaps investors think, Biden might start to refill the SPR, but it is weird that we're getting the rollover that you would expect when everyone's thinking the economy is going to go into a recession, but we're just not getting that bond rally. It's making me think that perhaps the liquidity in the market is just a little bit on the weak side, but it is a little bit odd, and I would like to see that relationship really firm up. We can't just keep getting the worst of both worlds where every recessionary indicator is going off, economy slowing, cyclical areas of the market are rolling over as a result, but we're not getting the push higher in the safety net of bonds. That's really not a good configuration. With that said, there are some stocks to watch heading into tomorrow if some of these relationships firm up. Perhaps we get a sell-off in the dollar tomorrow. That would be the best case scenario. Perhaps we get a rally in bonds. MMSI, this is a healthcare stock that is putting in a volatility contraction pattern. Next, we have PERI on network. I actually just talked about this one on a Twitter space. This is an Israeli company, and they have really nice sales growth, really nice earnings growth. And as we zoom out to the weekly chart, they've actually been putting in a very nice base. We're above this yearly value area high of $24.16. Here we have ARRY Technologies. This is a solar company that we already have exposure to via common shares. This one has been consolidating sideways ever since this company reported stronger than expected earnings, and our 20-day simple moving average is beginning to catch up to price. Next, we have CROX. This is another company that has pretty attractive sales growth, pretty attractive earnings growth. Trades at a decent valuation as well, and this stock really just ran off to the upside. Missed our entry in this one, so whenever I miss the entry, I always like to keep tabs on the stock, see how it progresses, and see if there's a pullback opportunity, and it looks like we are starting to get that. This is another name where the 20-day simple moving average is catching up to price. And then we have Academy Sports and Outdoors, ASO. This stock also has a pretty nice weekly chart. This one showed some very nice relative strength today during that week tape. Also, if the dollar ends up rolling back over, I think you want to keep these Chinese internet stocks on your radar. We have Alibaba, which finished the session down 4.41%. We got a pullback to this monthly value area high. It's much better to get an entry as we bounce off of this than buying as we get overextended to the upside like we did a couple days ago. Today we had nothing in terms of trading volume, and I really just don't want to force anything. With that said, enjoy the rest of your evening. We'll see you all next time.